explain how to pay off credit card debt and why you should. So if you own a business, a lot of business owners put most of their expenses on credit cards. And what happens is when you do that, if it's a personal card, that's going to weigh down your debt to income ratio, okay? And that's going to lower your credit score, which will give you less options in the future when you need to get financing, all right? Plus, credit cards, the interest compounds. So when it's not paid off, it compounds, and you wind up paying interest on interest. Whether it's 9%, 15%, 19%, when that compounds, it can get very expensive. So one, you wind up paying a lot more for the same money, and then two, it weighs down your credit and gives you less options in the future for any type of financing, whether it's an SBA loan or a line of credit. So what I suggest is, first off, if you own a business, make sure they're business cards and they report to the business and they don't go on your personal credit, okay? Two, if you can't pay them off at the end of every month, all right, it's great to use credit cards, it's easy to track expenses, but you gotta pay them off at the end of every month. And so if you're like most business owners that have gotten into a situation where you have a lot of credit card debt and you're trying to consolidate it and get rid of it, I'm gonna show you how. And I'm gonna tell you and explain why. So the first thing you could do is a term loan. All right, a term loan is a personal loan that's only going to go off your provable income and your credit. They usually go out 3 to 5 years, and they're simple interest bearing. Right, so you can pay off, you can consolidate all of that credit card debt really easily in one swoop. Sometimes you can even net additional funds to grow the business, and then you have one usually lower monthly payment. And now, since all those credit cards are paid down, your credit's going to shoot up, because that's revolving and short-term credit versus a term loan, which is long-term credit, sort of like a car payment. All right, so that's number one. That's the first way you can do it. The second way you can do it is utilize an SBA loan. Right, so if you go in and you get an SBA loan, you can typically use that to refinance a lot of debt, and it'll wind up being a much lower payment because an SBA loan typically goes out about 10 years. Okay? And so you'll have a much lower payment, and that will only go under the business, so your personal credit will be much, much higher. Right? Those are really the two ways that I have helped, and I see entrepreneurs paying down excessive credit card debt to boost their scores and honestly be in a much better financial position. All right? If you have questions about this or you need help, please reach out to us. I'm here to help. Take care, and I'll see you on the next one.